Good morning, everybody. It's the 24th of October. We're Signal Centre Talking Ball. I'm Joe, joined by Taff this morning. Good morning, Taff. How are you?
I'm all right, Joe. How's it going?
Good. Yeah, I'm all good, thank you.
Good.
Steve
How's
should
the
be along
weekend?
shortly. Yeah, weather was pretty hideous, wasn't it?
Yeah,
But all good.
been
Steve will be along shortly, just having a few internet issues, I think. So give him a couple of minutes to join. In the meantime, we can go through the latest headlines impacting markets over the weekend and into today, and then run through some charts as well. As always, if anybody's watching, please feel free to say hi on the stream. And if there's any particular charts that you are looking at or would like us to take a look at, just post them up on the stream and we'll do our best to cover them. Okay, on to the headlines. So, first up, the Fed hints over a pivot. Obviously, been lots of rumours around this for some time now because they haven't really slowed in terms of monetary policy, being very aggressive with that and looking obviously to continue hiking rates and dial back on the assistance for the markets. But in the latest report from the Wall Street Journal, it suggested that the Federal Reserve was aiming for a 75 basis point rate hike at the November policy meeting. According to reports, there are also divisions within the central bank whether to signal a smaller rate hike at the December policy meeting. Some are concerned over the potential impact on the economy, while others are concerned that inflation isn't falling. San Francisco Fed President Daly stated that she wanted to avoid an unforced tightening by over tightening, and that the central bank is now at a stage where it needs to be more thoughtful. The US bond yields retreated. The US 10-year peaked at a rate of 4.33% on Friday before a sharp correction down to 4.22% after the Fed rhetoric. And there was a further retreat to 4.15% on Monday over hopes that the Fed will pivot. On Friday, we also saw some intervention from the Bank of Japan. Obviously, we've been speaking about this for some time now, and it looks as though they stepped in on Friday, a really big move on anything linked to the Japanese yen on Friday afternoon. This was after the European close. The Bank of Japan intervened to support the Japanese yen and acting again in Asia on Monday, which helped trigger a bid for treasuries. This has created a fairly wild ride in the US dollar after posting sharp losses. On the back of the Bank of Japan intervention, we saw the dollar yen slide to lows below 147 from 32-year highs at 152. So five big figures moved on Friday afternoon, which of course is volatile stuff. In terms of the Chinese data, there's been limited relief there. There was stronger than expected third quarter GDP numbers coming in at 3.9% from 0.4% previously, and this was above the consensus forecast of 3.3%. Production data was also stronger than expected, but retail sales were subdued. In terms of the leadership race in the UK, Rishi Sunak looks poised for victory. Just after Monday's Asian Open, the former Prime Minister Johnson announced that he would not be standing to be the next Prime Minister, despite claims that he has enough backers to run. This puts the former Chancellor Rishi Sunak in an extremely strong position, and he could well be confirmed as the next Prime Minister later today. There's been a limited relief in sterling on the back of Johnson's announcement on hopes for an early resolution and easing of uncertainty. We saw a pretty sharp rebound in the price of sterling. So that obviously comes as welcome relief. So that's that for the headlines. Steve, welcome. Glad you managed to sort your internet issues. Hope you're
No worries.
doing good.
Yeah, all good, thanks.
Excellent. So let's get stuck into some charts then and have a look at how things are shaping up for the week ahead. Taff, would you mind taking us through a couple of charts?
we start with commodities. I'll just run over gold. Start with gold. Yeah, so gold with a rally on Friday, a really good rally on Friday. I think on the backdrop of the dollar weakening, retreating. I think as Joe alluded to, I think it had something to do with the Japanese Fed intervening. So this rally, and then it came from this zone that I had highlighted here, this I think 1615 to 1621 zone, and we went up. We seem to be testing the other zone that I highlighted here, 1672, 1679. Let's see what it looks like on an intraday basis. Here we go. So on an intraday basis, really price came all the way down to this highlighted level here. I talked about this, I think, on Friday in the morning, saying that I think the bulls will be in. and they might take price higher a bit, but I didn't think it was going to go all the way up there. But it's good that it did, because I think it was my gun to the head trade, so I think I almost hit TP on that. But for today, I'm looking for price to. You can see we broke this trend line here, trend line resistance here. So I'm looking for price to come down, get some liquidity from the first support here, which has confluence with this trend line resistance, which becomes support. If price comes right about here, I think this is the money spot here. If we get some sort of rejection, some sort of bullish hammer, probably on a lower on a lower time frame, then it'll be good. It'll be a good long, and then target the first resistance and possibly the upper end of the channel boundary, which is the second resistance. Our second support is that zone again, that 1615 to 1621. I don't see price coming all the way down here, but with price you can never be 100% certain. If it does come all the way down here, then a break of this could probably set us up for the 1600 level. But my bias is bullish here. I'm looking for to buy dips right about this first support level here. Let's look at crude oil. I'll start off with the daily. Crude oil is okay. Here we go. So if you notice clearly here, since Wednesday last week, since this bullish candle that we had Wednesday last week, yeah, we've had 2 days of indecision really. We had with a dodgy on Thursday, we had another dodgy on Friday, so that just shows indecision in terms of price. But what's interesting is that we have not been able to close below the 83.15 level that I marked here, and we are also below this 87.14 to 87.70 zone here. So this is where price is really playing around. I put this red line here on the 1st of November because I said this is when the strategic petroleum reserves that the US released, this is when they'll hit the market. So it'll be quite interesting to see what happens to price action here. But let's look at the intraday levels and see what can potentially transpire today on crude oil. Right. So as I alluded to, we are between this resistance zone and the first support here, this 83.15 support and 87.14 to 87.70 resistance zone. So I'm really looking for price. This is my money spot here. This first support level here at 83.15. I want price to come get in here. It combines, it has confluence with the trend line that's stretching all the way from Wednesday last week, I think. Yeah, Wednesday last week. It touched here, it was respected. We touched here again, it was respected. So I'm looking for price to probably come down here, get liquidity, and then probably break the first resistance, and then ultimately target the second resistance, which is 87.14 to 87.70. So yeah, so I'm mildly bullish here on crude oil. What could alternatively happen on the bearish side is that we break this trend line support, we break this first support again, and then on retest we could open ourselves up to the second support, which is 81.42. That's an alternative view. But my view is that my bias is mildly bearish, is mildly bullish, looking to buy any dips that come into this zone here. That's on crude oil. Let's see what's happening with nat gas. Nat gas has been on a downtrend, really has been on a downtrend, and it boggles my mind why I think we've gone from the August highs. I think we're like close to 40%. Yeah, yeah, like 45% from the August highs. But the funny thing is the utility suppliers haven't adjusted their rates at all.
Weird. It's as though
It's
they want to
weird.
make money out of people,
Yeah,
isn't it?
I mean, when price was going up, it was yeah, you can see the wholesale gas prices are going up, and then we understood that. But then
Hmm.
we're down like 40%, and then we're still paying ridiculous rates for gas and electricity. So yeah, so since we broke that trend line, it's just been one red candle after another, and I'd anticipated to see a bit of uh, bulls coming in here, but then there was none at all, and we just seem to be going down. So buying here would be the equivalent of just catching knives, and I would advise against it. This is really bearish. Our next support level is around 5.027. Let's see what it looks like on an intraday basis. Yeah, on an intraday we have that bearish channel here. that I outlined, and we seem to be respecting it really. We keep testing the upper boundary, we go down, we try and test it again, we go down, we test it again, we go down, test it again, we go down, and this is that the support. It was previous support when I highlighted it. Really, it was just ignored. Really, I think price just went down, tested the bottom of the channel, and then it came up here. It didn't go up all the way to the upper boundary channel, and then we just seem to be going down. So I think this is really just the bearish channel. I think my first support that I'm looking at is the 5.027. I think probably we will get some sort of resistance from the bulls here, but generally I think sell any rallies is my bias here. If price comes up to the boundary, then I'll just sell it and just go in line with the overall trend, which is pretty bearish. That's on natural gas. And then Bitcoin is quite interesting as well. Let me just expand it a bit. So Bitcoin is interesting. I alluded to this. I spoke about this 19029 level here being respected. It has been respected multiple times. You can see here on Monday 10 October here we respected it here. We keep respecting it. Price is not, it just can't seem to close below that level. And we had this resistance trend line, this trend line resistance here, which I thought was going to hold price and was going to push price down for a breakdown of this support here, but that didn't happen. We actually had the opposite happening on Friday because of the weakness in the dollar. Let's see what it looks like on an intraday. This is what we look like on an intraday level. Yeah. So we had that trend line resistance here. It was respected there. We respected it here again on Friday, 14 October. We respected it on Tuesday. So I was on Friday. I was expecting price to come up, get liquidity, and then break down, because this also looks like a descending triangle. But that didn't happen. The opposite actually happened because of the intervention of the Japanese central bank in the market. So we broke up. And we broke out of this formation. We broke this trend line resistance, and when you break resistance, when price comes down, it becomes support. So this is the first support zone here. This is the area that we are at here. This is a good, interesting area. Or if you get a bullish hammer, you get like some sign of bullishness coming in on a lower time frame, then this would be a good spot to get in for a buy and possibly target the first resistance, which is 19878 and ultimately 2463. But I doubt price will get here today. The alternative view is that we convincingly break here this first support at 19311. We convincingly break this. We come up, we retest it, and then on the retest, on the rejection candle, then we're looking for price to then continue all the way down and open ourselves up to that 19029, and then possibly come all the way down here to probably 18600, and then ultimately 18200. That is the bearish view. But I'm mildly bullish for Bitcoin. I'm looking for probably continuation of the momentum that we had on Friday, and possibly the dollar retreating further today. If that happens, then we're looking to target that first resistance. All right, that's all I have for you today.
Thank you, Taf. Nicely
Taf.
done. Let's take a look at FX then, shall we? So starting off with the dollar index. So as we mentioned at the start of the video, there was some volatility in the dollar index late last week as a result of this intervention from the Japanese central bank. In terms of how it looks on the weekly time frame, still very much in an uptrend, as we can see here. This was the candle that was posted last week, so a bit of weakness clearly, but still a little way to go before we actually retest the trend line. So for now, I still think it all looks pretty bullish. If you take a look at the daily, we can have a look at how price shaped up on Friday. As we can see, a big move to the upside initially, then we had the intervention, and we closed pretty much close to the lows. But in terms of what we've been seeing over the last few sessions, a big increase in the size of the ranges, but really not actually going anywhere. So ultimately, it still remains pretty robust and pretty strong, and therefore I'm still expecting to see higher prices. What I believe we will see is maybe a pullback to the trend line at some point, as well as this lows that we posted from the 4th of October and into this kind of range. I think it's a buy. You know, it needs to that's a decent pullback to allow the bulls to maybe get back in or re-establish new positions. Of course, if this support fails to hold and we also get a break of the trend line, then maybe what we will do is confirm a double top pattern, but it's very speculative at this point in time. But it can't be ruled out. Maybe we are in a phase of topping out here, but ultimately the trend still remains bullish. So I'm going to be siding with that. Just wanted to show this chart here actually, which is a breakdown of the currency baskets. So in blue, we've got the dollar index, so we can see how much this has outperformed other currencies for a significant period of time. What we have here is the European basket, the Swiss basket, Canadian basket, sterling basket, yen, Aussie and New Zealand. So we can see they've all been kind of trending lower in unison with the dollar index pushing higher. But we are maybe starting to see signs of these starting to round off a little bit and maybe begin to tick higher a little bit in the short term. That would indicate maybe a move back to some riskier assets, which is likely to benefit things like Bitcoin or current stock indices. And we're seeing that play out in some of these currencies. So that's quite an interesting sign as well. So let's take a look at some individual currencies then that are linked to the US dollar, starting with euro dollar. We saw a decent move to the upside yesterday. I mean, this just really is an inverse chart of what we've just looked at on the dollar index, and we're fast approaching resistance. We've got the trend channel, the bearish channel, and some horizontal resistance coming in at around 99.55. Above that would be targeting a move to parity at 1. But for me, I think into this zone here may represent a decent opportunity to sell in expectation of lower prices. But again, we could be in the process of forming a bottom this time rather than a top as we looked at on the dollar index. And I think a clean move above parity would maybe confirm that double bottom in the short term. And maybe we could start looking for higher prices, but it still needs to do quite a lot more before we can get excited about that. Looking at cable, we've seen a gap to the upside today, helped by this news that Boris Johnson will not be standing and giving Rishi pretty much a clean shot at it. And I think markets-wise, he's probably the best candidate for the time being in order to sort of create some stability. We've got resistance here at 114.95, which is these previous swing highs from the 5th and 4th of October. A break above that, then maybe we'll start to see a little bit more relief in the value of sterling. But clearly the overall trend remains bearish. Obviously, when we had this crash and then the stepping in of the Bank of England, it created a lot of volatility on the chart here. Prices are beginning to stabilize a bit. Let's see what happens later on today in the UK political scene and whether or not that's going to be taken kindly by sterling. Let's take a look at sterling Oz, just because we've got a request for it there from Mock. Let's get to that now. So sterling has seen a dramatic move higher against the Aussie dollar following the step in from the Bank of England. And obviously Aussie is highly linked to commodities and associated more with sort of risk appetite or taking risk. And we've seen that kind of take a bit of a backseat and sterling really drive higher, but it is or has reacted from quite an important resistance level at 181.26. So this is highlighted here by this thick black line. Obviously, it was a previous support back here in November 21. Then we saw a breakdown, a retest, and then prices continue to trade below that for a significant period of time. The rally that's taken place over the last few weeks or so has rallied bang into that level. We did have a little bit of a look above it, but then failed, and prices have continued to move to the downside. But there's been a big gap up today in price. If you look at where we closed on Friday, that was down at 176.71, and prices have opened up today at 178.02. So a pretty big move already here, and maybe if we are to believe this is continued or we're looking for continued bullish price action, then maybe this is some sort of bullish flag that we are breaking out of today, which will be a good sign, of course, for the currency, and suggest that maybe we will see higher prices. But clearly, in the short term, we need to overcome this level that we posted on the 17th of October. That comes in at 181.99. If we can get a clean break above that, then maybe we are looking for higher prices over the short to medium term, with the next target on the upside being up at this blue line, which is at 191.56. So from a risk reward perspective, if you were to trade now, believing this is a bullish flag, and that would be taking it along now with a stop below the low that we posted on Friday, targeting a move up to that resistance level up there at 91.54. You're looking at about 3.67 R on that one. So that would be a pretty nice trade from a risk reward perspective, looking at the daily chart. I'm going to take a look at dollar yen, just because we obviously had this big move on Friday and we can see it sticking out on the chart pretty aggressively. We were talking on Friday that we were close. Well, we had 13 sessions, what looked like it was going to be 13 consecutive up sessions. We didn't get that. We saw the big move on Friday, I'm sure taking out all sorts of stops and targets and everything in the process. So it would have been, would have created quite a lot of movement and position adjustments on Friday. We are rallying back close to the open level that we posted on Friday. So doing a pretty swift job of turning this around, suggesting that really the Bank of Japan, again, may be failing in their efforts with intervention, as they seem to have done quite regularly over many years. And if this goes back up to goes up to new all-time highs again, then I think that would be quite a worrying sign really for the Bank of Japan, and they may have to go even more aggressive to try and turn this around. But certainly on the front foot today, up by 1% as things stand. Any other currencies standing out to you guys?
No, I mean, that's pretty much covered it quite well.
Okay, lovely. I don't want to keep going on for too long. Steve, you can talk
No,
about
whatever you
indices.
do, don't come on for too long.
And if there are any other requests, then post them up on the stream. We'll try and come back to them. But Steve, you can run us through some indices now.
Okay, cheers. Farman's asking for gold, and Taf's already covered that, so you can have a look at the recording afterwards. He's done quite a nice bit of analysis on that. I'm going to step in. I'll start with the US indices. Don't usually start with these. Look at the weekly chart and see how we talked about this last week, the indecision we were getting, and the inverted hammers and signs of a potential bottom in the market last week. And even up until actually Friday, this wasn't a definite. We still hadn't broken above the resistance at 30,437, but what a day it ended up being. A fantastic bullish day on Friday, which took us above the resistance. We can see it a bit more clearly on here. So this has formed a double bottom. This has been confirmed. Even on Tuesday, it looked like we'd confirmed it, but we seemed to need this retest of support, which we got on Friday, and got a really nice bullish outside candle, which actually engulfed the whole previous 3 days of price action. So that as a blended candle forms the weekly, and the weekly looks really pretty nice already. Started off and spiked a bit higher this morning, got up to around about 31,400, just above there. We've pulled back, so I imagine we're going to get a little bit of a retest, but this feels like a little bit of a bottom is in place, potential for further upside as the week progresses on the US dollar 30. And actually we can see this 4-hour chart. Even on Thursday's price action, we talked about this potential for a double top. It did break below the neckline, but rallied instantly higher and closed above it, so negating that pattern completely within a 4-hour period. Now we've formed a shooting star on a 4-hour candle. That was the Sunday night's 10 o'clock to Monday morning's 2 o'clock candle. Shooting star there, potential for a bit of a sell-off, and I imagine longs will start to be set around about the 30,822, the previous swing high that we had. On the Nasdaq, the weekly Nasdaq bullish engulfing candle for last week after Friday's fantastic price action, and again we've had the same sort of price action this morning. We've had a push higher, a little bit of a rejection and a pullback. So really looking for this to sort of like really eke out a little bit of more clarity really on where we expect this to go this week. Nasdaq obviously has the tech sector involved in it, so it's a little bit different. Well, it's a lot different to Dow and the S&Ps, but on the Friday's daily chart, bullish outside candle. Very difficult to argue with this one, and really looking for where we get some support and some maybe short-term reversal on a smaller time frame to really see if we can capture some alpha to the top side here. Nice strong bearish candle as we're speaking. I mean, even looking for maybe a 50% pullback. That's around about 11,190. 61.8 will be 11,120. So they're the sort of levels that you could look to sort of go with this overall turnaround higher. S&P is very similar to the Dow Jones. What it's done actually on the S&P, we can actually see this morning doji star formation formed. Really strong week last week. Marabuzo candle, very popular candles, shows ultimate signs of strength in the market, and really look with a Marabuzo, 50% retracement of a Marabuzo is an ideal entry level to set longs. So really looking for let's get the exact level. 50% pullback would be 3,674. So looking out for that. We'll actually put that in. Should we put that in? Why not? There we are. There's the ideal buy scenario when you're talking about Marabuzos. Looking at the FTSE, again, similar sort of price action last week, bullish engulfing candle. We've had a lot more volatility in the FTSE, both price action both ways, bearish and bullish over the last month. We're now entering this week. We've had a really strong rally at the start of the week up to 70.70, and the pullback occurring now all the way down at 69.40. So again, looking for some levels really to set up for further upside. One of the interesting formations is the inverse head and shoulders. This is on a daily chart on the FTSE, and that sets up quite nicely for a move higher this week if we can manage to regain some control above that neckline. If we're looking for where we expect that to go, if we're looking for, so a measured move target will be somewhere in the region of 7,330 on the FTSE. Really needs to break back below the 68-65 level to negate that formation, or even really probably needs to get back below 67-80 to negate it, because a right shoulder could still form into this support here, this strong support that we've got lower down. Finally, going to take a look at DAX. Again, we talked about this as a this level of 12,633 as a bit of a neckline for this. It's not a great inverse head and shoulders, so really looking for an area around about the 12,600 for a real sort of like obvious good risk reward area, we'll call it, to sort of join in this correction higher. So we've seen the price action today stall at last week's high, which was up at the 12,946. It stalled again there this morning, just short of there, 12,944, and pull back. Really need to sort of break above that level, and then we can if we extend this line further, we can really look for the next challenge after that. I think it'll be quite a fast move higher to 13,367 to 13,550. So a nice 200-point range up there, where we're going to get some nice bit of support resistance. That's the sort of like typical resistance level we should be watching out for if we can manage to get above 12,946. I think that's it from my end. Thank you, Machandan, for the 350 coins you said. They're very kind of you. Yeah, so we'll I think we can leave it there on the indices, unless anyone wants to look at any other peculiar one.
No, it doesn't look like there's any other requests. And yes, thank you very much for those coins. It's much appreciated. We love you guys watching and participating. So please feel free to keep sending over your requests if you have any, and we will do our best to take a look at them each trading day. So let's move on to the gun to the head challenge then. So this is where the three of us pick live trade ideas on the video in the hope of some gains between now and 9 o'clock UK time this evening. So we each pick an idea. It's all placed at market. All the ideas have stops and targets. They must have risk reward ratios in excess of 2 to 1. And the trades will be posted to our TradingView profile. So if anybody wants to check them out, you can do so at signal_center. And you'll be able to see our trade ideas and the history of those on there. Just a recap on what happened on Friday. Steve was looking for a breakdown in oil, which did start off quite well, but then quite a lot of volatility, as you'd expect, as a result of this intervention that we saw affecting pretty much all asset classes, obviously anything linked to the US dollar in particular. And that was sadly stopped out. I was looking to try and play a small range on cable. Really a stupidly tight stop given how volatile this asset has been, and I got punished for that quite considerably. It dropped down, broke out through the stop, but then did rally quite substantially, but I wasn't in it to benefit, so no good on that front. And Taff, you had a nice win on gold, so you saved the day for us, I believe.
I was buying gold on this support here, and yeah, it worked out pretty well, man.
Yeah,
Smashed it, mate.
congratulations, mate.
God,
Absolutely
you're
killed it
you're
there.
hot. You're
He
hot
is
at the
hot at the
moment,
minute.
Taff.
He really is.
Fire.
I did have the stats up actually of what Taff had done in the last few trading sessions.
Oh, whatever he's done, I'm copying him today.
Yeah, feels like that, doesn't it?
Oh,
So
the pressure's on now.
yeah, your last 6 trades have yielded a return of 11.8 R. So you had a
is that all?
2.34 R return on gold
Oh, that's cool.
on Friday. Prior to that, you had a 2.24 win on silver. Prior to that, 3.8 R win on Bitcoin, and the list goes on. So Taff is the main
Hot.
man. No pressure.
Yeah, pressure is on, man.
So
you're Zimbabwe hot, mate.
Yeah. We call it it's a fire emoji. There's a song.
Exactly.
There's a song in Zimbabwe called Fire Emoji.
Oh,
So,
really?
Yeah, when you're hot, you just play that fire emoji.
Excellent.
Right, you get to go. You get
right,
to go
you'll go first
Taff.
then. We're watching you with sharp
cool.
eyes now.
All right. Okay, this one is not looking too good, but I'm just gonna just wait it out. I'm looking for Bitcoin to. I'm looking for this support here to hold. It broke the trend line resistance, so I'm looking for that to become support, and then we have also another support at the 19297. So yeah, so I'm going to play that and see how that goes for the day. So I'm buying Bitcoin at market, which is 19297. My target is the previous swing high, which is 19695, and then my stop is at 19139, and my risk to reward is 2.53. So see how that goes.
Best of luck, mate.
All right.
I'm taking a look at gold. Gold. So let's just have a quick look at the daily, shall we? So bearish channel from what I can see here, broken down through major support at 1676, which is highlighted by this black line, and we had a number of test points on that going back many months. So we saw a breakdown, we saw arguably a retest of it. We have formed support here at around 1617, 1618 as Taff highlighted on his chart. But if we look at price action over the last few hours or into the first part of today, we've rallied back towards this 1676 resistance and forming what looks to be a bit of a reversal candle so far. Looking at it on an intraday basis, we can see that we spiked up around midnight as high as 1670, but then prices have begun to reverse. So we just look set to close below the 10 period exponential moving average, which for me can be a bit of a trigger for a shift in momentum. So I'm going to use that as a trigger to get short, currently at 1651.55, targeting a move down to these swing lows that we posted on Friday at 1617.50. And placing quite a tight stop. I mean, ideally, I'd want it maybe above that, but the risk reward ratio doesn't allow. So I'm going to go at 1660, which gives me a risk reward ratio of 3.93 to 1. So I'd be very happy with that if that comes in. I'm going to get that published up now. So if anybody wants to check it out, feel free to do so. Excellent. Over to you, Steve.
I fancy indices this morning. Not often that happens, but obviously, and the one I'm looking at, that seems to have the best value at this current point in time, is the FTSE. After last week's bullish engulfing candle, we're seeing a bit of a retracement now. We've got this Marabouzo candle, which I've mentioned, and we've got the 50% level coming in at 69.23. We're just above there at the moment, so 69.23 below there can be my stop. Obviously, from the daily perspective, inverse head and shoulders playing out. We're having a bit of a retest now, and I'm just preempting that this retest will be a successful opportunity to set along. So I'm going to set longs around about current levels, and I'm going to keep the stop quite tight, 69.12, and target a move back to the highs, 3-to-1 risk reward. That's what I'm looking at, buying FTSE and targeting a move back up to 732. Stop is at 69.12, getting long at 69.42.
Okay, cool. There's 3 trade ideas for anybody that's interested. They'll be posted up to the TradingView profile, and yeah, feel free to check them out throughout the course of the day, and we'll refer back to them tomorrow. In terms of what we can look for in the day ahead, we have a series of flash PMI numbers out today. So German one's just come out 6 minutes ago. We've got the UK one at 9:30. These are all UK times. And then we have the US PMI index at 2:45. Key events over the rest of the week, quite a lot of central bank action, starting off with the Bank of Canada on the 26th. Then we've got the ECB on the 27th, followed by the Bank of Japan on the 28th. We're also pretty stacked with earnings this week as well. All the big tech names are reporting this week. Nothing particularly stand out today, but we'll keep an eye on that throughout the course of the week to keep you posted on what's due out and when and what the expectations are. And I think, gentlemen, that's pretty much it. So obviously, the other main event in the UK today is whether or not we're going to get a new Prime Minister installed. And the suggestions are that it's going to be Rishi Sunak, and that could be dealt with as close as today. And that may provide an element of relief to a number of UK markets and obviously the UK currency. So keep an eye out for that as well.
Brilliant. Thanks, Joe.
Okay.
Joe.
Anything else, gents?
No, all good.
I think that's it.
Lovely. Okay. Well, have a great day, everybody. And we'll be back tomorrow morning.
See you tomorrow.
Cheers.
Bye-bye.
Bye.